HUT 8 Corp, trading under the ticker HUT on the NASDAQ, closed at $44.12 on Friday, December 19, 2025, marking a significant intraday jump of 14.33% or $5.53 per share. As of today, Sunday, December 21, 2025, the market is closed, but the momentum trailing from that final session of the week has the entire sector talking about what is happening behind the scenes at this particular company. Most investors looking at the ticker simply saw a massive green candle, but the real story is much more complex than a simple rally in sympathy with the broader crypto market. While many people still view this name as just another Bitcoin miner, the reality is that we are looking at a fundamental restructuring of what this business actually is and how it intends to capture value in an increasingly power-hungry world. The expectation was that this company would follow the standard cycles of its peers, moving in lockstep with the price of digital assets and struggling to maintain margins after the last halving. However, the reality we saw this week was a massive 15-year, $7 billion lease agreement with Fluidstack for 245 megawatts of capacity at their Riverbend campus. This is not just a standard hosting deal, it is a massive commitment that includes a right of first offer for up to an additional 1,000 megawatts. When you see a figure like $7 billion attached to a contract for a company that was recently struggling to prove its utility-scale viability, it creates a massive curiosity loop. People are starting to realize that the physical assets held by these former miners are becoming more valuable than the mining operations themselves. This shift into providing infrastructure for artificial intelligence and high-performance computing is turning the traditional investment thesis on its head. Think about the general narrative surrounding companies like this. Most people using a typical individual brokerage or a platform like Robinhood often bucket these stocks as high beta plays on the price of Bitcoin. They think if the coin goes up, the stock goes up, and if the coin drops, the stock crashes. But that view is starting to look outdated. We are seeing a divergence where the physical assets, the transformers, the substations, and the high-voltage grid connections are being priced with a premium that has nothing to do with hash rates. When you look at the recent activity on investing sites, there is a clear trend of sophisticated investors moving away from pure-play mining and toward these power-first platforms. This is exactly what is driving the interest in HUT 8 right now. They are positioning themselves as an energy infrastructure platform, and that change in identity is what caused that 14% surge we saw on Friday. For someone managed through Schwab Intelligent Portfolios or similar automated services, these names might seem too volatile, but for those doing self-investing, the opportunity lies in this massive gap between what the market thinks the company is and what it is becoming. If you look at the recent trading volumes, they have exploded. On Friday alone, over 11 million shares changed hands, which is significantly higher than the 30-day average. This indicates that institutional players are likely moving in, rebalancing their portfolios to gain exposure to the power side of the AI boom, without necessarily paying the extreme multiples currently demanded by Nvidia stock or even Apple stock. It's a smarter way to play the picks and shovels of the current tech cycle. The financial performance reported in the most recent quarter supports this shifting reality. Revenue reached $83.5 million, which is a massive 91% jump year over year. Even more impressive is the net income of $50.6 million, a huge turnaround from previous losses. This growth was driven by a mix of improved mining efficiency and the early stages of their move into managed services. But the real meat of the story is the development pipeline. They have over 8,600 megawatts of capacity in various stages of diligence and development. To put that in perspective, that is a scale that rivals some of the largest utility operators in the country. Investors using Interactive Brokers or Fidelity Wealth Management are increasingly looking at these numbers and realizing that the floor for the stock price might be much higher than they previously thought based solely on the value of the energy contracts and the land. Let's talk about the business model for a second, because it is important to understand how they actually make their money now versus 2 years ago. Historically, the model was simple: buy rigs, plug them in, and hope the asset price stays above the cost of electricity. Now they're splitting the business into 3 distinct segments: compute, power, and digital infrastructure. The compute segment still handles the mining, but it's being run through a subsidiary called American Bitcoin, which allows the parent company to stay lean and focused on the infrastructure side. The power segment generates revenue from actual power generation and managed services, providing a more stable cash flow that isn't tied to the volatility of any single digital asset. And finally, the digital infrastructure segment focuses on colocation and data center services, which is where that massive $7 billion Fluidstack deal sits. This diversification is their secret sauce. By owning the power assets and the infrastructure, they can switch between the most profitable use of that power at any given time. If mining is highly profitable, they can lean into that. If the demand for AI compute is higher, they can lease out the capacity to someone like Anthropic, as they just announced. This flexibility is something you don't get with a pure-play tech stock like Tesla stock. It's a hybrid model that provides a cushion during market downturns while still offering massive upside during expansion phases. Comment below how many shares of HUT 8 Corp you currently hold, or if you are planning to add to your position before the next earnings call. When you look at the institutional activity, it's clear that the big players are taking notice. We are seeing more coverage from firms that typically focus on traditional energy and infrastructure rather than just crypto analysts. This is a huge signal. When the analysts who cover utilities start looking at a former Bitcoin miner, it means the quality of the earnings is being viewed differently. They are looking for durable returns, as the CEO Asher Ganote recently mentioned. They aren't interested in chasing short-term trends. They want to see a clear path to gigawatt-scale operations. The market reaction to the Q3 earnings was initially negative because people were worried about the execution risks of such a massive expansion, but the recent partnership announcements have largely silenced those critics for now. The reality of the situation is that we are in the middle of a massive squeeze on global power capacity. Data centers are popping up everywhere, and the grid simply cannot keep up. Companies that already have the permits, the land, and the grid connections are sitting on gold mines. This is why the valuation of HUT is being re-rated. While someone using a SoFi active investing account might be looking for a quick flip, the long-term investors on platforms like Fidelity or Vanguard are looking at the 15-year contract terms and realizing this is a generational shift in how energy assets are valued. The expectation was that these companies would become obsolete as mining became harder. The reality is they have become the landlords of the digital age. Now, let's look at the risks, because no investment is a sure thing. The execution risk here is real. Building out gigawatts of capacity requires billions of dollars in capital expenditure. While they have a strong balance sheet with $1.6 billion in Bitcoin reserves, they're still going to need to tap the markets. They have a $1 billion at-the-market equity program, which can lead to dilution if not managed carefully. However, they have shown a lot of discipline so far, only issuing shares when the price is at a premium. Investors need to keep a close eye on their debt-to-equity ratio, which currently sits at a very healthy 0.14, but that could change as the construction at sites like Riverbend and Vega ramps up. Another factor to consider is the broader macroeconomic environment. If we see a significant cooling in the AI sector or a major crash in digital asset prices, it could put pressure on the timeline for these projects. However, the long-term demand for compute isn't going away. Whether it is for training large language models or processing complex financial data, the world needs more data centers. HUT is essentially selling the dirt and the power that makes all of that possible. Even if you prefer self-investing through more traditional means, it is hard to ignore the logic of owning the underlying infrastructure of the digital world. Looking ahead to the next few sessions, we need to see if the stock can hold these new levels. Breaking above the $44 mark was a huge psychological and technical win. The next major resistance is near the 52-week high of around $57. If they can continue to announce more of these high-value partnerships, there is a very real possibility we see a breakout towards those levels and beyond. Analysts have already started raising their price targets, with some now looking as high as $80 over the next 12 months based on the updated valuation of their power pipeline. In summary, what we are seeing with HUT 8 is a classic case of the market finally catching up to a reality that has been building for months. The expectation was a volatile miner. The reality is a massive energy infrastructure platform with billions of dollars in contracted revenue. The shift from mining to AI power is not just a side project, it is the core of the business now. They have used their Bitcoin holdings as a fortress balance sheet to fund this expansion without the massive debt loads that have sunk other companies in the sector. Whether you are trading on Robinhood, managing a